Hi everyone, hope you're all doing well. Today I'm going to talk about a brand new stock that I'm buying into my UK portfolio. This is a position that I could see coming quite a large position in 2025 if the stock continues to stay at these levels, or even better, if it goes down and I can buy more of it at cheap prices, that'd be amazing. So I did start buying this at the start of the month, and I'm going to show you today which stock that is. If you could hit the like button if you're around here, subscribe. Let's get started. Now obviously you guys on the Patreon know what stock this is. I will reveal it in a second, but if you do want to join the Patreon so you get to know what I'm buying and selling in real time, the place to be is on there. It's £5 a month unless you want to pay for just the videos that I put on there. It's £3 a video. As you can see, on the weekend we did a stock request on Boom Battle Bars or XP Factory. That's one that's been requested a lot in the comment section. So if you don't see exclusive content, join through the link in the description. £5 a month, 2 exclusive videos a week, Discord with 500 members on to talk about stocks, including me. Let's get started on today's video. So the new UK stock is B&M. I did start buying some shares in B&M at the start of this month. Currently a £4.06 stock. The stock is down from its all-time highs in 2021, and it's down from its 52-week highs, which was December the 8th, 2023, when it was a £6 stock. Since then, the stock has fallen 33%, which now puts it only just around about 7% above its pre-COVID levels, which when you look at the business from a pre-COVID point of view, the company's gone from 3.3 billion up to 5.4 billion. And from a profitability point of view, it's gone from 202 million in profitability up to 367 million in profitability. So you can see here, there's a big disconnect between the fundamentals and the share price, and hopefully I can take advantage of that and buy it on this dip and make some money out of it. It's a decent sized company for a UK company. It's around about 4 billion market cap. Trades at 11 times earnings, which I believe is far too cheap for a company like B&M. Obviously, it's a retailer, so a retailer will sell at cheaper prices. In my head, I've got about 15 times earnings, so I do think there's going to be some multiple expansion going on here with B&M. But previously, the stock has actually, before the COVID situation, used to trade just short of 20 times earnings. So it is below what it historically did trade at. It is below Tesco's, which I would look at B&M and say B&M is a higher quality business than Tesco's. Tesco's is very much near its ceiling. I believe B&M is not near its ceiling at all, so I would expect B&M to outgrow Tesco in the next few years. And the next kind of a quality retailer, I would call Marks & Spencer's. The turnaround in Marks & Spencer's has been amazing, and I'd say that's more of a premium kind of retailer in the UK. And when I compare it to them guys, they're about 18 times earnings. So when I look at B&M at the moment, it's not only cheaper than its historic valuation, it's cheaper than competitors like Tesco and Marks & Spencer's, and that for me sounds like a very good deal. It does also pay a 3.6% dividend yield, which I do also believe is going to get increased over the next few years, and will in the next few years get up to a 5% dividend yield. So even if the stock doesn't work out, I'll also expect to collect a nice dividend, and that will soften the blow. But hopefully it's a winner, and then I also collect the dividend. That would be the perfect situation. So you can see already it's a lower price than what it historically has traded at. Now B&M, if you're from the UK, I don't think they need any introduction. I'm sure you go to one on a regular basis. B&M, you see them around all the town centres, and some of them even have these garden centres on top as well. Great stores, big brands, big savings. You go in there, everything's a little bit more cheaper in there. Some of their own brands, and it's not just food products, it's other things like furniture, decorations, which you go there and you can end up buying a whole different cart of different many objects in B&M. Now the recent earnings have been very good from B&M. If you look here, group revenue was up 10.1%, adjusted EBITDA was up 9.7%. Operating profit was up 13.6%. Earnings per share was up 5.2% as well. So a lot of the numbers are moving in the right direction at B&M at the moment. Now they do have 33,000 employees, which would probably be the only negative that I have, is that the big thing is if there is big increases of the minimum wage, this company could get affected by that, with it being a bargain retailer. That is my only concern. However, if we are going to hit a tougher time, I would expect B&M to be someone that actually does well in a tougher environment, because everybody will be a little bit more conscious about what they are buying in the time frame, and obviously people look at bargains and think I'll go to more of a discount retailer like B&M. So that is also something that would work out for it. I think in a tough environment they'd get more consumers, but also if we're in a better environment, I think the average value of B&M would go up, and people would be maybe spending a bit more on the big items like furniture, for example, that they sell. So I think B&M wins in a weak environment and a strong environment. The only concern that I have is more probably around the minimum wage is the biggest threat I see to it if there's big jumps there. They've got 741 stores, as you can see here in the UK. They do have 124 stores in France, which is their newest expansion. And then they also own Herring Fruit Foods, which is a bit more of a northern supermarket, which they've got 335 stores of. And you can see here the breakdown of all of these products, where a lot of them comes from the B&Ms in the UK is the big makeup currently of the revenue. Now they have got some ambitious targets, so they are going to continue to hopefully increase Herring's Foods. But the two big drivers are going to be the new B&M stores in the UK. So they have set a store target to get to 1,200 B&M stores, which is nearly a double up in the store locations. So like I said, compared to like Tesco's, for example, I believe the room for expansion for Tesco's is pretty much near the ceiling. I think pretty much everywhere they can be, they've got there with Tesco's. B&M, I still feel like there's good opportunity to expand into more locations in the UK. France is the big growth driver. So they recently expanded into France, and they are hoping that the France expansion will do very well for them. And at the moment, it has been doing very well for them. And like I said, they could continue to expand into Herring Foods. And like I said, I think B&M is a very liked brand in the UK. People like going there. People actually like talking about going there. If you go on TikTok and search B&M, if you go on YouTube and search B&M, there'll be many videos with people. People watch this. I mean, I don't watch this. I bet if I ask my missus, I bet she watches these sort of videos, to be fair. But people go on YouTube and TikTok and actually watch people go to B&M, look at the latest products and maybe the dupes or the cheaper decorations they have. Big one at the moment is Christmas 2024, and going into B&M and looking at the new range of Christmas decorations they have. And you look at these here. I mean, this video here from someone called Christy Griffiths 9 days ago. I mean, it's got 10k views on that video alone, and then obviously got the TikToks on top. You got another one here from 2 weeks ago, which is a B&M shop with me. What's new in autumn and Christmas? People watch these videos. I mean, they probably say the same things about me. People could watch me talk to a camera about stocks. But thousands of people do advertising for B&M, and it's a trend. People actually, younger people going on, making videos and going to these stores, and they enjoy it. And that's great for B&M as well. It's a really light brand. I reckon it'll be one of the more higher liked brands in the UK. And B&M doesn't actually pay a penny to advertising. When you look at the ones that we just talked about, Tesco's, they all, we've seen the Tesco adverts on TV, Marks and Spencer's, we've seen the Marks and Spencer's, Spencer's on adverts on TV. B&M is a supermarket or retailer that doesn't even need to advertise. It spends nothing on marketing because everyone else does it for them, because they are so good at developing these products and the ranges. People love that, and they share the information and what's new on the internet for free for them, and they don't even have to pay anything for for marketing space, which is something really unique out there that you don't normally see. And you look at the company historically, great track record of delivering on revenue growth and profit growth, as you can see here, with nearly 367 million in profitability. We'll look at Stockopedia in a second, but you can see here the growth is expected to continue at high single digit, nearly double digit rates at the moment. Balance sheet wise, yeah, there is a little bit of debt on there. It's not going to be cheap to have a company that does this sort of operations and the venues and what they need to have here. So it's not going to be more than likely a clean balance sheet, but I'm okay with this. 910 million debt there, cash and equivalents. They've got 182 million there. They're a company that's nearly at 400 million of profitability a year, which is okay for these debt levels. So I'm not too concerned from that point of view. Dividend wise, like I said, I think the dividend will start going up. They did pay a special dividend during this time frame when everyone went bonkers and went straight to these kind of bargain stores like B&M. So they did pay, and after the COVID situation as well. So they did pay a couple of special dividends out, and then I reckon that we'll see that slowly start to increase a little bit more going forward. Ownership wise, I would like to see some little more buying inside the company, which is currently going on, but there was a lead director that did pick some shares up at £5.19. Looking at Stockopedia, they're once again expecting decent growth on the top line, as you can see here, 2025 numbers, 2026 numbers. And from an EPS point of view as well, they're expecting the EPS to go up at good rates as well, which will mean the company will trade at 10.6 times forward earnings next year, and the year after could trade at 9 times earnings, which I think is very attractive at the moment. They did come out with a recent update where everything looked okay, especially the French. The expansion into France looks very strong. There is a full interim results coming out on the 14th of November. So in a month's time, I would expect the stock to move a fair bit one way or the other when the interim results do come out in a month's time, which is worth pointing out right now while we're covering it. Now, look, like I said, let's look at some numbers here. So I put 3, 5, 7% revenue growth in. I think they will come in between the 5 and 7% range. Obviously, analysts at the moment are expecting maybe a little bit higher than that, so I'd be even a bit conservative from that point of view. Profit margin of 6-7%. They're currently doing a 6.7% profit margin, I believe it is. So they could potentially, as a scale up, maybe push into that 7% range. They did actually get to a 9% profit margin during 2021 and 2022, so it is achievable. Earnings wise, I've put down a multiple of 15 times earnings because I think that's what they should trade at. And at the moment, on the low side, you got a 44% upside, which is good because these numbers obviously would be a little bit disappointing if they did get there. Mid side of 81% and on the high side 95%. And then obviously you add the dividend on top as well. You are getting over to 100% upside on the mid side and the top side numbers. Now, realistically, like I said, I actually think that there'll be more towards the 5 to 7% range. And if they do match something like a Marks and Spencer's or a Tesco on what it normally trades at, of a multiple of, let's say, 19 times earnings, like what it not historically did before COVID, and what we see Marks and Spencer's and Tesco do at the moment, there is plenty of more upside here. As you can see here, that's where you're getting plenty of over 100% return. And then also, like I said, you add the dividend on top. So I'm really happy to buy a starter position here, and I believe that it'll have very good growth, and then it'll also have a bit of multiple expansion, and you'll collect that dividend going forward. My plan is that I bought a starter position here. If it drops another 10%, I'll then double my position. And then if it drops another 10%, so down 20% from here, I don't think it'll go any lower than that. You never know in the stock market, that's the thing. But if it does go 20%, then I'll double it up again. And I will be willing to put B&M into my top 3 positions if it was to go down another 20%. Just to put it into context of how much that would change for the upside, you would definitely have a lot of upside then. Yeah, I mean, you're talking on these numbers, over 100% upside, and like I said, I've not really put that at 19 times earnings, so if we do have multiple expansion as well, you're getting nearly 200% upside at that point, so I think the risk to reward would be very attractive there. So yeah, I have bought a position in B&M, and if it drops 10%, I'll double up. Drops another 10%, I'll double up again from there, and I'll be willing to make it a top 3 position anyway. So that is where I'm at with B&M. That's my plan on what I think it can do in the next 5 years, and also my plan on how I'm going to build into position anyway. So hope you enjoyed the video on B&M, guys. If you could hit the like button, let me know what you think about it in the comment section as always, and I'll see you on tomorrow's video, guys. Catch you in a bit.